Good morning. Good morning. Welcome back to the channel. And welcome to another pre-market report live stream. I will go over to every asset that I check every day to try to assess what is the context for the day. All right, so with that, let's jump right into the content. We have a lot of stuff to get into, so let's jump right in. All right, this is the NQ. No, so let's review the economic calendar for the week. Today we do have housing market index. I don't think this is very impactful for the market. Tomorrow we do have some housing numbers in Redbook. Wednesday is a big day. We do have mortgage number, but then in the afternoon we do have the federal fund rate decision of the Fed meeting, the FOMC, and then the press conference. Thursday, regular jobless claims and all those numbers that come out every week. Friday, we have Jerome Powell speaking. Where is that? He goes to a conference or something. That's fine. All right, he's gonna be speaking. So, all right. So with that, there's a lot of things that I want to point out because Fed meeting is on Wednesday, and being that on Wednesday is very, very valuable for me to understand what the Fed is gonna do. And for that, I do to the CME Group website, and I look up for the target rate probabilities for the 21st of September meeting, 2022. And I did see that they are planning to hike rates to 3% to 3.25, so that will mean 0.75%. The current rate is up to 250, and they're projecting the new one will be up to 3.25. This is the overnight rate. So it's very important to understand this because the market is pricing in whatever this is telling us. Okay, so and I want to do this job because I think it's very important to see what the dollar do beforehand, before the Fed meeting happens, right? So is I think is good to see previous meetings and what the dollar did, right? So I marked them off here on the chart. This is the dollar chart, and here you can see how the dollar on the March 15th to 16th meeting, so 14, 15 meeting, 15, 16, there you go, 15, 16. The dollar was sideways, but the previous weeks it was going up, and then it was sideways, and then, but the same date of the meeting ultimately came down to a demand, and then we continue to go up. The second meeting of this year was in May. Sorry, I'm not counting the second meeting because I think the first meeting was in February or something. But I do have May 3 and 4. So May 3 and the Fed announced the rates. The dollar came down, and immediately the day after started to go up. Like a similar scenario with this one, we were going up, and then the dollar dropped on the same date of the meeting, and then it continued to go up. All right. June 14, 15. June 14 and 15th. The dollar was going up, and the same day of the meeting, dropped hard. Following day, was going up again, and then it held that demand, and it continued to go up. Now, then we had the July meeting. The July meeting is an outlier. Didn't do the same. The dollar was actually dropping before the meeting, like few days before the meeting was dropping, and we do have 26, 27. So the 27 actually was like sort of like sideways, and then ended up negative that day. The following days dropped, but ultimately it found some demand. And if you guys see, this was the previous meeting. We came to the previous meeting range, and then we continue to go up. Okay, so that was the last meeting. Since this meeting, we have gone up quite a bit, and we're going sideways, right? It's yet to see what is going to happen on Wednesday, but what is a very repeated variable that happens with the dollar after Jerome Powell's press conference is that the dollar goes down. Okay, so that's what we will expect, even if they raise rates 0.75%. I will expect the dollar to react to the short side. So we might have a bullish day on Wednesday, right? But that's what the dollar has done the last 4 meetings. Okay, if we go to a lower time frame just to see, obviously the higher time frame, this is a daily, no questions. They're still going up big time, and this big run up was the CPI report released last week. Okay, for those who just joined us, I just reviewed these circles here are the last Fed meetings and what the dollar did on the last Fed meeting. So we want to be aware of that. Okay, dollar usually drops on the press conference. This is a lower time frame, 30 minutes. Clear rejection here. We had this demand. We broke to the downside, and then we held. This tells me that this demand turned into supply, and then now it's turning back into a very important level where you have some pivots here holding for you, right? If the dollar holds this level, I do expect the market to continue to go down, because if the dollar is going up, today the dollar is going up, right? It's going up not much, 0.33%. If the dollar continues to go up along with the and we will see them, the rates, the 10-year yield, then I will expect more a downside on the market. Okay, if we happen to break to the downside again, but I don't think this is the most likely scenario. If the dollar comes here, then I will have to analyze. I will have to reassess my plan. We either can continue to go up or turn around. Okay. All right, so that's my plan with the dollar today. Here you have the yields, the 10-year yields, where we broke to the upside during London. So we went up to 3.518. 3.518. If we scroll back the chart, we get levels from 2011. Okay, we don't have too much data here. This is TradingView. We'll have to do some research, but certainly we haven't been so high in quite a while. And the run up was very, very steep. It was very quick. So this year we went from 1.6, and right now is 3.475, but we went high up to 3.570. Okay, so if rates continue to go up along with the dollar, I will short text and cyclical, meaning NQ. Okay, I know the market is retracing right now to the upside, but we do have a lot of supply. And we'll see the NQ chart until it breaks certain level. I wouldn't be very enthusiastic with the long, at least on the higher time frame. If I'm gonna do a quick scalp, remember the markets are fractal. Whatever happens in the 4-hour, daily, weekly, it happens on the lower time frame. So it all depends on the risk that you want to take. Okay. All right. So the big chart, the VIX chart, we did have this demand. We never returned here. We turned around at this line of support. Now we are as a resistance right here. This white line has been violated like quite like 1, 2, 3, 4, 5, 6. This is the 7th attempt for it to go up. I do expect the VIX to continue to go up. There's a matter of fact, I do think the market is not absorbing whatever is happening on the equity markets correctly, because this tells me that people are not panicking. The market dropped 5% last week, and the VIX just went up from 22 to 27. Whereas in the past, if we had that kind of drop, we would have gotten like to above 30, right? We haven't gotten to 30 in quite a while, since the lows from June. Okay, so I do think the market do expect some sort of reversal, and it's yet to see what is going to happen. All right, regarding commodities, crude oil dropping hard today. Remember that we had this demand right here. For me, it already worked, and I don't consider this a good demand anymore. It can continue working, but for me, is already this was the entry point, and we never got to our target. So it's time to just ignore this demand. That doesn't mean I won't pay attention to it, but I do think this thing is going to continue to go down. I think fundamentally we do have some catalyst to keep going down. Inventory has gone up. There are a lot of alternative, and OPEC is planning. They already They already planned some cut on production, some cuts on production. So that tells me that they're expecting prices to go down, right? So these people held perfectly this one, so never got to our supply right here at 92. All right. The time frame, the higher time frame trend is down. If you want to go to the weekly, we still have in a bullish mode, but unless you are a hedger or an airline or something, you wouldn't see this as an uptrend, right? All right, so that's all for with crude oil. Other commodities like gold is breaking down below 1700. I was expecting 1700 to hold right here. I think is right now is 1650. The next stop around here. Sorry, 1520 around here. So let's see if the dollar continues to go up, then most likely that gold is going to continue to go down. There are a lot of seasonalities involved in gold and metals and so on. Lumber continues to go down. Copper continues to go down. So those are, for me, the best indicators that inflation might come down anytime. It takes a lot of time, and CPI is a very lagging indicator. So I do think the Fed is causing some effect here, right? Probably the market is pricing that in, that idea of inflation coming down sooner, right? We did have some expectations last week about CPI, and we didn't meet the expectations. But inflation is the rate of inflation is coming down a little bit from 9 to 1. Now it's 8.3, right? But it's gonna take longer than we thought at the beginning. So that's why I think the markets are not panicking. Here, I don't see the market panicking. Yes, the CPI day, we went down sharply, but we stopped. We didn't panic, right? After this day, we're just hanging out there, right? Investors are just waiting. I don't see any panic selling right here. All right, so this is the ES. We do have a demand that is completely used up. And I do have other demands here. If you go to the 4 hours, right? This one here closed at 6. This one here closed at 10. But we do have some sort of, let me put a line here, a support line right here. Right, it's right at the end of the demand. For me, there's no reason to be bullish in this market when is stepping to the downside. All bear flags, like it comes down, retraces a little bit, comes down, retraces a little bit, comes down. So until this thing does not show me that it wants to turn around, I wouldn't consider this to the long side, but the bullish case for me would be something like this. And this is the 4-hour chart. Okay. We do have some trend line that we created right here. And then we're breaking to the downside. Now, I do think this area has a lot of buyers, a lot of people that are the ones that are not panicking here in the VIX. Right here is the same buying that is happening right now. Okay, but it's yet to see. Will all depend on Wednesday what investor ultimately decide to do. And we'll see. We'll play short time frames. But for me today, obviously bearish. But I need to be aware, like I said on Friday, there are some demands in front of the price, and if price is coming down, ultimately we'll find buyers. So I don't want to short in front of a big chunk of buyers. Okay, I want my location to be probable, and I want my trade to have a lot of risk and reward ratio. All right, so that's the ES. NQ has a little bit better scenario because the demand was not used up. So we haven't broken Friday's low here on the NQ. Let me check the ES. We did a break Friday's lows on the ES. So let's go to the lower time frame. Friday's lows was here, 38.53. We went down to 38.46. Okay, so in the NQ chart, we haven't broken the Friday's low, so that tells me that the tech will be stronger than the ES today. So what I want to see is the dollar dropping a little bit and the bond yields dropping a little bit. Let's come back to the dollar chart. If the dollar turns around, if the dollar comes back down, I want to see some change here, which is happening right now, right? But not yet confirmed. So my confirmation will be something like this. And when it comes here, then that will be the long on NQ. Okay, but like I have said, I don't see this as a bullish chart. For me to be bullish, completely bullish, I mean, it'll be something around like this. Okay. That doesn't mean I cannot trade a long. I have said this is a demand zone. So if in the lower time frame this same picture shows up and the tick chart gets aligned and coherent for me to take a long short term, I will do it. Now I don't want to be shorting at the lows because I know this is a demand zone. Okay. Same thing. If this thing comes back up, right, and comes to this point, and I don't have the risk and reward ratio, I don't want to short here when this thing can hold to the upside right here. Okay, I want to have the internals coherent to my trade direction. Good morning to all. All right, for those who are just joining, at the first of the video, I checked up the countdown here on the Fed meeting probabilities, and we went over the dollar and all the scenarios that had happened on the previous meetings this year. So I think it's worth for you to watch the scenarios for the upcoming meeting this Wednesday. Let's go over Apple. Like I said the other day, I don't think this demand will hold. Now we retrace back down, a bear flag. Now we're gapping down. If we break to the downside, I will say Apple has more room to go down to 143.60. Is very Apple has respected quite good its areas, right? Its levels. All right. So with that, for now, I am bearish because the dollar is going up along with the rates. If something changes, meaning the dollar start to retrace back down along with the rates, I will be more long oriented on the short term. If we break the high from the highs from Friday's closing, and then that will be a different scenario. I could think more on a long, but for now is all bias short, and we'll see how the trading session goes. How do you like? No, I will use the internals, the ADD, and the tick chart for me to give me more probabilities on my trades. I do trade off of the 500 share bar chart on the NQ. That's a pretty short time frame oriented. Okay, so if you like this video, please consider to subscribe and share it to your friends so we can grow this channel. And I'll be live in 15 minutes for the trading session. Thank you guys. See you in a bit.